Welcome to the Cover Your Assets podcast, a show for the physician who understands the importance of protecting everything you've worked so hard to achieve. If you're ready to find the peace of mind that only financial security can bring, let's get started. Here's your host, Billy Gwaltney.
Hello, welcome to this episode of the Cover Your Assets podcast. I'm your host, Billy Gwaltney, and it's good to be with you. Today's topic is, can I buy less disability coverage while on a tight budget in training? And that's an excellent question that the bottom line answer is yes, you can, depending on the insurance carrier you go with. The typical amount of, in working with thousands of physicians across the country, most of our clients, we start working with them when they're in training, and they're typically looking at a $5,000 per month benefit to start out. Recently, the top insurance carriers raised those limits, 3 of the 4. Now a resident and fellow, depending on the company, can buy up to $7,500 of coverage while they're still in training. And with one of the carriers, you can go as low as about $500 a month of coverage. And what's interesting is that if you do it right, you get all the privileges and benefits of buying a $5,000 a month policy or a higher benefit. Even if you start at $500, you're just starting at a much lower benefit, which means your cost is much lower. You're getting the same discount. You're getting the same strong, true specialty occupation definitions. You're getting the same benefit increase rider that lets you scale up or increase coverage once you become an attending. You're just starting off at a much more budget-friendly level. And that's typically for people that have a number of years left in training, or for some reason they're like, hey, I really see the wisdom in getting this coverage. I see the wisdom in going through the streamlined medical screening or getting the policy issued, whatever that process is, so that once it's issued, they can never take it away from me. But I just don't have the money to buy $5,000 a month of coverage, whatever the cost is for that. If it's $100 a month, if it's $200 a month, whatever it is, I just can't afford that right now. But I can't afford $30 a month or $20 a month. Or is there a way to do this and still check all those boxes, knowing obviously that if a disability occurs before you increase coverage, you're going to get a much smaller benefit. That's the trade-off. We have had a client or two get disabled before they finish training. And so don't be naive and think, hey, I can't get disabled till I'm an attending. That's the real reason I'm getting this. It's understandable from a financial standpoint that you're going to ultimately protect a much higher income, hopefully. But the downside is that if you are disabled, you cannot increase coverage once you're on claim. So you couldn't go from $500 to $7,500 or $5,000 once a disability occurs. For that claim, you're going to get the $500 a month for the duration of that claim. Now, if you have the COLA or cost of living adjustment rider on your policy, then that can be that would go up. But it's not like you can just say, oh, I'd rather have the higher benefit now that I'm disabled. That's not how it works. So the risk is that if a disability occurs, you get less benefit. There is a little bit of a cost difference because the rates are fixed based on the age you purchase, okay? So if you are 30 when you buy $5,000 a month of coverage, you're going to pay that same age 30 rate to age 65. Okay. If it's $100 a month, it's going to be fixed at $100 a month with my clients. It doesn't increase. If you buy $500 a month of benefit, you may pay $20 a month. Okay. But if you're older, when you add the next $4,500 a month of coverage, if you're 31, then the cost for that extra that $4,500 is going to be higher by about 5% than it would have been had you bought the whole $5,000 at age 30. Okay. Conceptually, that might be difficult to follow. I'd be happy to discuss it with you in more detail if you want. Just reach out to me. But yeah, there would be a bit of a cost difference if you're older. When you increase the coverage later, you're going to pay more as you're older. Okay. The rate's still fixed. It's still got the discount. But it would be adjusted based on, there'd be a slight adjustment for the age you are when you actually buy that amount of coverage. So the more coverage you buy at a younger age, the lower the amount that you ultimately pay for that coverage. Okay. But to answer the question, Bottom line, can you buy less coverage in training and still check all the boxes? Yes, you can. Not with all the carriers. They don't all let you go down to $500 a month. Okay, so it depends on the carrier. If you want to have the benefit increase rider on your policy, you got to make sure that you purchase the amount of coverage that they require in order to have that rider on the policy. The devil's in the details. Okay, so work with a specialist. I'd be happy to help you. I'm a specialist. I help clients do this all the time. Please message me here or text me here if you would like to discuss. The number is 704-270-2376. Again, 704-270-2376. Hope you found this helpful. Look forward to seeing you next time. Thank you, as always, for your time.
Thanks for listening to the Cover Your Assets podcast, an Odd Conduit media production. New episodes drop every 2 weeks. If you've enjoyed the conversation, subscribe, rate, and review this podcast. For more tips and advice, visit the website and YouTube channel. Check the show notes for links. Join us next time for another episode dedicated to helping physicians like you get your disability insurance right and protect your way of life.